Hey there, everyone. Happy Monday. I'll tell you what, Russell 2000 stocks, IWM, the ETF, tracking them so far, outperforming QQQ and SPY. So the NASDAQ 100 and the S&P 500. We'll take a look at the charts in this video and also the catalysts for this week that we absolutely need to be watching for. And I'll give some commentary about what exactly we want to see in order to remain bullish on the markets. And so stick around for that. By the way, I'll also tell you later how you can see more of my analyses and my buys and sells over at the Discord, link in the description. 50% off your first month when you sign up using the code word doctor. In the meantime, let's jump right into what we got coming up. So the very first thing we want to look at today, we got some bond auctions coming in 3-month and 6-month. Don't anticipate to be massive unless something comes in wildly unexpected. Watch for higher yields to be one of those things that could mess with that. 52-week and then the 3-year coming up on Tuesday. But then the big stuff starts to kick on Wednesday because we get the last CPI before the Fed meeting, which comes up on the 17th and 18th. But the 18th is when it concludes for this month. So that's 9 days away. So not this coming Wednesday, but the following Wednesday. We want to be watchful for that. And I will say, when you look at the core inflation rate, right now consensus is up above what we had the previous month. And then when we look at that also, my apologies there, year over year for that core number, ticking up from 2.8 to 2.9, at least as per consensus over the previous month. So what we're looking at here and the impact that we're looking for the inflation numbers is, are we going to start seeing a rolling back up of inflation with some of the Trump tariff stuff going on? Are we going to start to see those higher prices being passed on to the consumer? Because if so, then the market could get a little bit worried about inflation resurging, coming back even more in the face of tariffs. But that could also speak a little bit about the pricing power that companies has, but it does put a further squeeze on the consumer when we already know that there's already a significant amount of stress there in the first place. Now, mind you, the market can still go up with the consumer under stress. It's when something breaks is really when you start to see those big old sells coming back in, or when there's a significant reason to be fearful, uncertain, or doubtful, like we saw not too long ago when the market retraced just a whole bunch and we hit those lows back in April following the Trump Liberation Day tariff announcement. And now, mind you, we have about a month to go from today to hear more color commentary for what could be coming for that 90-day suspension. So as we get closer to that, that could also be pressure. So back into this. So watch the inflation rate here. Lower is better. And if we don't really see an upward change for that, that could be a very positive thing for us. Moving into Thursday for PPI numbers that we get here for the producer prices. Now, mind you, we stepped in a hole. So coming in 0.2, 0.3%. It's not going to be so bad for something like this one to see these numbers come in like this. It wouldn't be wildly rattlesome to the markets. We also want to be careful that we don't see numbers low enough that we start to suspect deflation is on our way, because producer prices, like there's just the pricing power is not there, and then it's going to infringe upon earnings. And to stave off the infringement upon corporate earnings would be those times that you start to get those massive layoffs and we start to destabilize the labor market. So those are things that we want to pay attention to for PPI as well. As we look at this, that's something that we want to see. These numbers would come in just fine year over year from 3.1 down to 3 for consensus. That'd be good. So what we want to see we want to see very subdued numbers. We don't want to see wildly negative numbers. We definitely don't want to see numbers that are high either. So not coming too far off consensus, hopefully to the lower side for these inflation numbers, because this is the last PPI report that the Fed gets prior to their meeting conclusion on June the 18th. So that's what we got coming up. And then also on Friday, we have Michigan consumer sentiment. The market's up right now. So we'll see what we get. We might be all right as long as the market continues to stay up. Now, mind you, that's just the preliminary numbers that we get on Michigan consumer sentiment at 10 a.m. We want to be watchful for that. And then what we expect to see that longer run inflation look like, that would be something down here, 6.6%. We want to see that go down lower as well, because if we expect higher inflation to be coming our way, that can pull forward purchasing, and that can also cause further inflation to happen as well. So that's a number we want to watch, and we want to see that continue to subside. So not only do we want the reports to say that inflation is down or staying down, but we also want to see that it's expected, as per Michigan Consumer Sentiment Survey, to say that inflation is also expected to go down. So guys, let's jump into the charts. For this, we're going to jump into QQQ for the NASDAQ 100, SPY for the S&P 500, IWM for the Russell 2000, which has been outperforming. We'll see if it continues to outperform today. So let me put this up here. We'll go to Qs. There we go. Here's exactly what I'm looking at as we get into this week and as we get close to that Fed meeting. We have this rising wedge pattern taking place right now. As long as we stay inside of it, we're all right, but we are nearing that apex of it. Breaking up above it is wildly bullish. We have a very hard line right at about 533 where we got that big old rejection last time. So we got to be watching for what happens around that 533 number. If we're able to close above it, and especially we break out of the top of this rising wedge, 540.01 is the recent all-time high that we had. There we go. Right there. We had it back on the 19th of February. That's the next place that we're looking for at least an initial major rejection right around 540. But sitting on top of it is something that we were never able to do. And that also is the last number that we got before. I mean, there's that sell that we talked about, little bounce, little dead cat bounce in there, and then just kept on selling off from there, but then recovered wildly since that time, giving us this incredible V-shaped look that we have here. Now, do we have that economic placement right now in the markets? Do we have that strength in order to continue higher? We're going to have to watch and see what the reports say. And I talked about the 4 pillars that prop up markets: high GDP, which right now is looking all right. So that's okay as long as that, my goodness, as far as that pillar is concerned. And then inflation, we need to remember to stay subdued. So subdued inflation, strong labor market, which so far, well, we got numbers that at least comforting that the wheels haven't fallen off the wagon. And then that last thing is easy monetary policy. We want to watch for those 4 things to be in place for the markets to go absolutely wild. And so the Fed can do its part next week when we hear from them. So that's what I'm looking for. SPY, same rising wedge pattern. We're not quite at the top of it like we were for the Qs. So we have really ridden along that support line. We have not gotten that third touch off this resistance, although we might see it today. We'll have to watch and see. 599 was that number to cross and to stay above. And when we closed, we got 599.14. 600 is going to be a bugger. If we can keep and hold 600, we'll be in a good shape for that. And then the all-time high coming at 611.39, which led to that sell that we have back over here as well. So we're going to have to watch and see what happens. Should we near that all-time high? If we fail to solidly break 600, then we have to be really concerned about this trend line. IWM, check this out. This is the massive inverse head and shoulders that I was talking about for IWM. And we, like I said, we've gotten this candle over here was that break above the neckline. Pre-market right now we're showing, once again, outperformance over what we see for QQQ and SPY. So as for instance, right now, as I record this, Qs are up about 0.1%, SPY's up just shy of 0.2%, IWM is about up 0.75%, but it is also, out of the 3, the only one that's below its 200-day, which happens to be right around 215, and it's good and flat, so we could really hit our heads pretty darn hard off of that. And then we want to watch and see if we get a retest of the neckline. We might not see that. It might happen. It might not happen. We do have this yellow trend line that we're holding right now. Good. We'll see if we continue to hold it. And then right up above that 200-day is some pretty massive resistance. And then up above that red line that you see, the red trend line coming right up across here, passing through that resistance, is definitely something that we want to watch for. If the market ends up with those 4 pillars all shiny and polished, at least the sentiment, the narrative being that way, we could see that nearly 20% climb up to that 248. Now, mind you, we've already put in some of that work already. And in terms of that climb, how far do we have to go in order to get up there? Well, we have about 17% to go. So this is one that I'm absolutely watching. One of my favorites, especially if we get up on top of that 200-day, even though we do have some resistance to fight through. And in terms of these trend lines that you see across where we have the white, that's right here, the green, the yellow, the red. If I go out to the monthly chart, you can see a lot more on that. That it is this, once again, this is per month. This goes all the way back. That red line starts its touch all the way back in May of 2008. The green starts its first touchdown at March of 2009. So this is 16, 17 years in the making for this bull channel. And we die up above the red line, not necessarily right away. And it depends on a lot of things, the circumstances that get us up there in the first place. It comes to life down below the green, and it lives in between the red and the green, especially in between the white and the yellow. It tends to stay there a bit longer. And if I take down the technicals, you can see that we're up above the 200-month, the 50-month, the 20-month, crossing above it. If we go down to a weekly basis, we just got a nice candle on top of it last week above the 20-week. We have the 50-week just above that, which happens to be at 214.25. Sitting on top of that would be extra bullish for us, especially getting the blue to cross over the red. That would be the 20 over the 50. That'd be a bullish cross between them. Now, I do want to talk about Bitcoin in a second here, because that can also tell the story of how we view risk assets, which can also be further color commentary on what we could see for the Russell 2000 stocks, which IWM tracks. And guys, if you want to see more of my commentary, see my buys and sells, see what I did with IWM and how I'm trading it right now over at the Discord, you guys can see all that and more. There's a whole panel of experts. I'm just one of them that's over there. There's a team of us to support you in your journey towards financial freedom and building alpha in your portfolio and looking for those opportunities across the different markets, stock market, bond market, crypto market, you name it. We're always talking about it all the time over at the Discord. Thousands of members have already signed up for that community, and you guys can get it. When you use code word doctor and you sign up for the earner tier, you get 50% off your first month sign up. Check it out. See what you think. You get unrestricted access to everything that community has to offer during that time using the earner tier, using that code word doctor to save you some cash on that. I think you're going to find out that you love what you find over there. You're probably going to end up staying. Also in the description, you can find out how to trade options, find out how to read technicals, how to do technicals yourself, how to trade using technical analysis using the bread recipe trading strategy, which I personally use as the best, the simplest to follow that I've ever found. Code word doctor is going to work for those courses as well. Through Stockmo Academy. Stockmo is a personal friend of mine. He brought me into the community for the Discord. He shared with me a link that allows me to support my channel for those courses. And he, being an old school financial advisor, me having years in education, 17 years in education and a passion for finance, bring my own personal learning to this, my own personal flavor to it as well. I can tell you those courses are top notch. And even me, I still find value in those courses and going back and revisiting those. And I think you guys will too. Code word doctor is going to work for those as well. Bundling the courses and using code word doctor is going to give you the best savings possible. Let's talk about Bitcoin. So for Bitcoin, more Michael Saylor buying coming into Bitcoin. Here's the chart on it. And I put out a video yesterday. You should go and watch it. We have the 5 above the 13 for the EMAs. Let me take that in technicals for a moment. This is a very bullish look. We got the bounce off the 50 EMA. We crossed back up above the green 5. We crossed above the yellow 13. Now we're sitting on top of it with that cross. We just need, the only thing missing in this recipe is volume support. We had that volume support when we bounced off the 50. That's a good thing. And then we want to watch and see where exactly do we hit our heads on this. Well, I'll tell you what, so far, and this candle is developing. Let me bring down the volume so we can actually look at the candles. There we go. So far, we have not hit our heads on resistance up here. If we can close above, we then have 107 as support for us, and that can be a much better launching point for this next movement. And guys, last time that we hit that all-time high of 112, we had an RSI above 70. It was actually at 78, and then it cooled down significantly. Well, now we find ourselves at 107. Almost 108. We're creeping up on it. The RSI is back down at 58. So we have a nice cooled off RSI for this. And if we look on a weekly basis, we're also in right territory, sitting at 65. So bullish, but not overbought. And then we go to the monthly chart. We're at 70. We're still a little bit in that overbought territory. We'll see. And I did say on our way to the price target for this, which mind you, my price target that I have for Bitcoin is 134,000. We could push up to 140,000 on this if we're able to break this top that we have right along here that you see forming on the monthly chart. We could make that push that finishes this movement that took place back in August of 2024 up to the peak that we had in January of 2025. When we copy that same movement, that'll take you to that $134,000 price tag. We could settle a little bit by then, but we don't have to. Just so you know, we could definitely push a little bit more from here. As a matter of fact, I guess it'd be pretty significant from here, 25-30% to get us up there. But we could definitely do it under the right circumstances, especially if we find ourselves in that risk on scenario. And I talked again about those 4 pillars. High GDP. So far, we're doing all right with GDP. And then when we move on to that into labor market, so far we're doing all right in the labor market, at least as per the hard data that's out there. Remember, the market doesn't necessarily need all the facts. It just needs the narrative that goes along with it. And then we also need subdued inflation, watch CPI and PPI, and then we also need easy monetary policy, watch what the Fed does. So hopefully we get some subdued inflation, and then we get a dovish Fed coming out. Those two things could really help us out. Tariff news is definitely something to also keep track of, because that's going to continue to influence the markets as well. And we definitely want a strong positive influence. We want the tariff stuff to subside and cool down and reduce trade tensions, because the more that that gets reduced, the more that we can relax, because it's the more that the Fed can relax, and the more that easy monetary policy can come our way. It can really help fill out that GDP and ease things in the labor market, like everybody benefits should the whole tariff business subside and tensions decline. Guys, like I said, if you want to see more of my commentary, see my buys and sells, see more of my technical analysis, the link's in the description for the Discord. Use code word doctor when you sign up to make sure that you get that 50% off in your first month when you sign up for the earner tier. And then also down in the description, that coursework, learn about those options. They're definitely worth learning about. Even if you never trade them, at least you can understand them and the impacts that they can have on the market. And then also technical analysis and the bread recipe trading strategy. If you're looking for a way to really help you to benefit the most that you can in the markets, is the best that I've ever found. Code word doctor is going to work on those courses as well. Guys, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.